Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
Carol?
Yes?
I don't need to tell you this.
What?
But if you never want to miss a Bloomberg Businessweek story,
I never do.
become a subscriber today. You're already a subscriber, though.
I am a subscriber. I love reading all the Bloomberg Businessweek stories. I go
New
to
issue
the
out
Bloomberg
now.
app. What?
There's
I
a
know.
new issue out now. I just got my hands on it today.
Yeah.
You'll unlock deep reporting and analysis from reporters around the world, including unlimited access to Businessweek. Check out our offers right now. Bloomberg.com/subscribe now.
Good stuff, as always. Want to talk about the next segment?
I do, yeah. You know, when we were preparing for this, and I'm not going to blow up anyone's spot here,
Okay.
but when we were preparing for this next interview, someone in the newsroom asked you, Carol, if ESG and impact investing are the same thing.
They're not.
I overheard this conversation. They're not the same thing, and you did a masterful job answering the question.
Thank you.
But I think that question is really important because it shows that there is this gap in understanding when it comes to all of these different terms that are thrown around all the time. That's exactly where Priya Parrish comes in. She's adjunct professor and impact investor in residence at the Chicago Booth School of Business. She's also a chief investment officer at Impact Engine and the author of the new book, The Little Book of Impact Investing, Aligning Profit and Purpose to Change the World. Welcome, Priya. Good to have you. How are you?
I'm great. Thanks for having me.
Yeah, thanks so much for joining us. It's funny because this book, the way you wrote it, it's not meant to be for people on Wall Street necessarily. This is like the type of book that's meant to be for everybody out there. Why do you think everybody out there needs to understand impact investing?
Yeah, well, I think like a lot of books in the Little Book series, it's meant to be approachable and for, everyday retail investors as well as institutional investors to understand some of the most important investment strategies out there, which, started with index investing. And impact investing is really an approach that is for everyone. Everyone is an impact investor, a retail investor, a pension fund, an endowment, because your investments are already having an impact, whether you know it or not. And so the real paradigm shift is investors developing the skill set to know how to evaluate the impact so that they can then choose whether they want to invest to create a desired impact, just like they have the right and the choice to invest to a desired return and risk, right? It's just another dimension. So interestingly, it is meant for everyone, but today, if you're going to be a professional investor, you actually have to understand impact and ESG. It affects all of us.
It does affect all of us, but it's not something that's still top of mind when people make investment decisions.
Oh, wait. Are you talking about returns that really matter?
That's exactly what I'm talking about. Thank you, Carol. You must know my line of questioning here.
Go ahead.
But it's true, Priya. I mean, investors care about one number when they're looking at their statements, right? They want to have had a healthy return. They try to beat the markets. So how do you take that into account when thinking about impact investing?
Absolutely. A number of impact investors really are striving to generate top-tier financial returns, top quartile returns, just like any other investment manager. The difference here is that we use impact and societal problems, which I just think about as large market failures, things that businesses and markets have not yet solved in terms of getting people and businesses what they need in terms of the right products and services and the right prices. They're taking those market failures and seeing them as opportunities, things to invest in that can be high growth and large addressable markets to be the crux of what can create for very financially valuable companies. So if what you're striving for is top returns, a great lens to view that, especially in venture capital and private equity, is looking for large secular themes and identifying the companies that are solving for that. So clearly in the climate world, more and more large Fortune 500 companies have made commitments to become carbon neutral. Well, how are they going to do that? They need to invest in both sustainable packaging for some companies, including as well as sustainable aviation fuel. Everything about their business, from their manufacturing process to their supply chain to their distribution, needs to think about the carbon footprint. And impact investors are looking for those companies with those solutions that are really meeting these very, very large demand drivers in a number of sectors. So it's a great way to make money and make a change in the world.
I do want to remind everyone, sustainable aviation fuel, thanks to my conversation at the Bloomberg Green Conference with an executive from Alaska Airlines.
Yeah.
it doesn't mean the emissions are like, smell like French fries. Okay.
No, they don't.
It just means the process of creating that fuel is not as carbon intensive as creating traditional jet fuel, but there are still emissions there. So
No, it's a good
I don't want to
point.
give anyone the wrong idea that, you're burning grease.
French fry oil.
Yeah, exactly.
I'm looking at your portfolio: Full Harvest, Jetty, Footprint, Core, Cloverly. Tell us a little bit about your investments, and I am curious. Do all of them do well? Do all of them provide, I don't know, is it market return? Like, what's the metric you measure it against?
Yeah, at Impact Engine, we invest from early stage venture all the way through buyout, all private investments, private companies, and focusing on 3 big market opportunities: environmental sustainability, health equity, and economic opportunity. Every investment we make, we have a thesis or an objective to generate a market rate, meaning similar venture or private equity like return for the risk we're taking, as well as measurable impact. And like any investor in this asset class or any asset class, there's obviously dispersion in returns. Some investments hit their mark, some exceed them, some go below them. The distribution of returns is no different for impact investors than mainstream investors and investment strategies. And I think that's the part that I think people need to understand is normal. Impact investing is still just investing, right?
It is, but does it get to the point in our lifetimes, Priya, where it's not impact investing anymore? It's just investing because every investment that you're making is also pursuing this other purpose. Like it's the default. You know what I mean?
Yeah, I do believe it becomes just normal investing, but the exact same way that normal investing, people have different risk tolerances, right? If what everyone was always doing was maximizing returns, why would you ever invest in muni bonds, right? The point is that there's also this thing called risk and liquidity and taxes. Well, guess what? There's one more dimension called impact. So I do believe we're approaching that point where investors ask the impact question as one more dimension, and they're optimizing around that and building a portfolio that achieves their goals. Whether it's a pension fund or an individual investor, they're thinking about that as well.
And forgive me, and we're going to take a break in just a moment, and then we'll come back and continue the conversation. But the returns, what's the average annual returns that you guys are seeing on your portfolio? And just got about 30 seconds, then we'll continue after a quick break.
We're an SEC registered firm, and I'm not allowed to speak about my returns if I'm not marketing to accredited investors. But it is similar returns. If someone's looking for target returns in venture capital and private equity, we're targeting those same returns.
All right, good to know, good to know. Hey, Priya, sit tight. We're going to come back. Priya Parrish, we're talking with our partner and chief investment officer at Impact Engine, joining us from Chicago. She's got a book out called The Little Book of Impact Investing, Aligning Profit and Purpose to Change the World. So we're going to continue. I also want to get into maybe some of the portfolio companies and talk a little bit about them. But there is a difference, impact versus ESG. When
I was in graduate school, impact investing was like the hardest class to get into.
Really?
People used all their points. The bidding, I have 10 seconds. I can't explain the bidding points.
That's what my daughter wants to do. Like she's kind of interested in it in a big way.
Yeah, very interested in it.
All right. We're going to continue when we come back. This is Bloomberg.
You're listening to Bloomberg Businessweek with Massar and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Businessweek. That's Carol Massar. I'm Tim Stenovec. Let's get right back to Priya Parrish. She's adjunct professor and impact investor in residence at the Chicago Booth School of Business. She's also chief investment officer at Impact Engine, author of the new book, The Little Book of Impact Investing, Aligning Profit and Purpose to Change the World. Priya, I mentioned at the end of, just before we were taking a break from the interview, I mentioned the fact that this, I went to graduate school, 8 years ago or so. This was always one of the most popular classes in school. A lot had to do, of course, with the professor, but you are a professor at Booth in Chicago. Are you seeing more student interest and then indeed when they graduate going and working in this field when they graduate from business school?
Absolutely. At the University of Chicago, we have a bidding system and people have to use points to get classes. And this is a difficult class to get into because there is so much demand. There is a generational shift with the younger generation, millennials and Gen Z. Even in finance, really the reason they want to be in finance is to make a difference in the world. And that is another reason why impact investing is a way to make good returns, because at the end of the day, managing money is still a human capital business, even if it's more and more tech enabled. And I see in the impact investing sector, we are getting some of the best talent. It's really just talent arbitrage. Many students tell me it's harder to get a job in impact investing than in banking or consulting or a tech startup.
But is that because there's not that many firms out there for those who want to do it?
It's both. It's one of the fastest growing investment strategies, growing at roughly a 14% CAGR over the last 10 years and expected to continue. And so there are many firms, including large firms like the KKRs in the world, having impact funds, and a lot of the people there want to work at the impact fund more than other things, as well as pure play firms like Impact Engine and many of our peers. So it's certainly a smaller segment, but the supply of talent and the number of people wanting to go into it, it's significant and exceeds the number of jobs for sure.
So those new jobs, are they going to be created because there's so much interest? I mean, if there is actually that much interest, then the market should do its thing and there should be more firms that are doing this, right?
That's exactly what we've seen. And that's why the industry continues to grow. It's over $1 trillion and expected to, again, continue to grow at a very rapid pace. We continue to see new funds, as well as existing asset managers offer impact investment products.
Okay, that's what I wanted to talk about. Sorry, the existing asset managers and to what extent they're offering these new products.
Yeah, you are seeing it across asset classes. It started in public markets with ESG, and we see it amongst venture capital funds, private equity funds, private credit funds, real estate funds, you name it. There are more and more traditional asset managers seeing the client demand. At the end of the day, that is why this industry has become what it is because clients are demanding it and investment firms are responding with various products.
Clients like pension funds?
Some of the largest investors in impact investing funds tend to be foundation endowments, family offices, high net worth investors. I would say that pensions and endowments are, those are large investors themselves, so they are large dollars, but as you look at it as the percentage of pension funds doing it, it's a smaller amount than the percentage of foundations investing this way in endowments.
Hey, there was an earlier story this year that Bloomberg News put out about how impact investors were getting a new toolbox to help them navigate capital allocations claiming to be aligned with the UN Sustainable Development Goals. So this goes right to impact investing. JP Morgan Chase was involved, Natixis Corporate and Investment Banking, and they wanted a set of guidelines that the biggest U.S. bank characterizes game changer in impact investing, right? And this is to kind of help investors be able to single out SDG aligned projects and activities and basically have, the same kind of metrics on any kind of projects that's out there. So what's out there in terms of telling investors, okay, what this really means in terms of impact investing? Because it feels like there hasn't been some really clear metrics.
Well, I would say there's three things an investor needs to look for and that firms are responding with clarity. The first is they need to be clear about what their goal is. This is the type of impact we are trying to create and for whom. When you have a fund manager who doesn't say that and they're just waving labels like mission driven and lives saved, that means nothing. Tell me what kind of impact you're trying to create and for whom. Mm-hmm. Number two, they need to be able to articulate how they do that, how the way they invest actually creates that kind of impact. What types of companies, what is driving it? Is it the people, is it the products, is it the place? And then finally, to your point, they need to be willing to and honestly wanting to be held accountable. Just like from a financial return perspective, you have a stated goal. I'm trying to target X return. You can tell investors how you get there, and then you show them the returns so that you can be held accountable and they know how to measure you. So impact investment funds absolutely require measurement. That is part and parcel of the definition of impact investing is that there's measured impact. It is not like an IRR though. It is not one single metric because the impact of a carbon capture company is quite different than the impact of an ed tech company. So the metrics have to speak to that impact, and investors have to be sophisticated enough to understand what's good versus bad at measurement.
Well, a fun topic to talk about, no doubt about it. As you say, money continues to flow into impact investing. So great to get some time with you. Priya Parrish, Partner and Chief Investment Officer at Impact Engine, joining us from Chicago. Check out her book. It's The Little Book of Impact Investing, Aligning Profit and Purpose to Change the World.